Welcome back to Factful Finance. Have you ever wondered how the wealth you've built can continue to impact your family and future generations? Passing down your assets isn't just about what you leave behind. It's about creating a legacy that aligns with your values. In today's video, we're diving deep into Estate Planning 101, How to Pass Down Wealth, Part 48. It's a question that everyone with an estate needs to think about, but most people shy away from it. How can I ensure my assets are passed down without complications, taxes draining the value, or family disputes tearing it all apart? Let's break it down and find out how to pass down wealth effectively and thoughtfully. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. So, why is estate planning so crucial? Well, according to the Federal Reserve, a staggering 70% of family wealth doesn't make it past the second generation. Imagine working your whole life to build up assets, only for a lack of proper planning to diminish their value or complicate their transfer. That's what we're here to avoid. Let's talk specifics. First off, one of the key players in estate planning is your will. Many think a simple will is enough, but there's more to it. A well-crafted will outlines who gets what, when, and how, but it doesn't do everything. Without a solid strategy, your assets could end up tied up in probate for months or even years. And that's time your family can't afford to lose. A trust is often the better option for those looking to pass down wealth more efficiently. Unlike a will, a trust can help avoid probate altogether, keeping your estate private and quicker to distribute. The question is, which kind of trust should you establish? There are revocable living trusts, irrevocable trusts, and special needs trusts. The type you choose will depend on your goals, whether that's minimizing taxes or protecting your wealth from creditors. Let's bring in a real-world example. Take Henry, for instance. Henry, a successful entrepreneur, wanted to make sure his business interests and real estate portfolio would be managed smoothly after his passing. He set up an irrevocable trust, ensuring that his assets would not only avoid probate, but also be shielded from estate taxes. His beneficiaries received the assets without hassle, and Henry was able to pass down his wealth intact. Could this strategy work for you? But here's where it gets interesting. Tax implications are a huge part of estate planning, and if you don't pay attention, your family could be left holding the bill. Did you know that the IRS estimates that nearly $16 billion was collected in estate taxes in 2021? That's money that could have gone toward your family's future. So what can you do about it? One strategy involves gifting assets during your lifetime. You can give up to $15,000 per person per year without triggering gift taxes. That might not seem like a lot, but for a couple, that's $30,000 a year. Over time, this strategy can significantly reduce your taxable estate and leave more for your heirs. Another essential piece of the puzzle is life insurance. Not only does it provide your loved ones with financial security in case something unexpected happens, but it can also be used strategically in estate planning. Some people use life insurance policies as a way to pay estate taxes, making sure that their heirs aren't forced to sell assets like the family home or business just to cover taxes. And let's not forget about the emotional side of things. Estate planning isn't just about dollars and cents, it's also about communicating your wishes. A common mistake many people make is assuming that their family knows exactly what to do when they're gone. But let me tell you, lack of communication is a surefire way to start family disputes. Having open conversations with your loved ones about your estate planning decisions can prevent a lot of confusion and stress down the road. Here's a story you might find insightful. Olivia, a widow in her mid-50s, suddenly found herself managing her late husband's estate. While her husband had set up a will, he hadn't communicated the specifics to her. As a result, she faced confusion, frustration, and unnecessary stress when she had to make decisions without a clear understanding of his wishes. After working with a financial planner to set up a comprehensive estate plan, Olivia felt a sense of peace, knowing her estate would be managed according to her wishes, and her children would be well taken care of. Now, I'm sure you're thinking, this all sounds great, but what if I don't have a fortune to pass down? Well, Estate planning isn't just for the ultra-wealthy. It's about ensuring that whatever you have, whether it's a house, savings, or even a small business, goes to the people you care about most. And with tools like life insurance, trusts, and tax-efficient gifting, even small estates can be passed down with minimal tax consequences. So what's the takeaway? Estate planning isn't just about distributing wealth. It's about ensuring that your legacy is preserved in a way that's efficient, tax-effective, and, most importantly, aligned with your values. What's your biggest takeaway from today's video? Let me know in the comments below. I respond to as many as I can. If you found this helpful, you'll love what's coming next. Stick around for more financial breakthroughs you won't want to miss. And remember, always consult with a certified financial planner to tailor your strategy to your unique situation. If you're ready to dive deeper into estate planning or have questions, I'm just a comment away. Until next time, keep planning and building toward your financial future.